Welcome back to The Explainer, everyone. Today we are looking at an absolute financial earthquake in the sports world. We're mapping out the official 2026 Indian Premier League franchise valuations. And honestly, digging into these numbers has been completely mind-blowing. We are seeing valuations right now that are literally rewriting the global playbook for the sports business. It's a definitive ranking of the top 10 teams, and the sheer scale of the money involved, well, it's going to change how you look at the game forever.
So what actually happens when a cricket team becomes more valuable than a massive multinational corporation? Because make no mistake, that is exactly where we are right now. IPL franchises are no longer just sports teams playing a quick 2-month tournament. They've evolved into these incredibly premium, highly sought-after global asset classes. We're talking Wall Street-level assets commanding the attention of giant private equity firms and international consortiums. $1.78 billion. Just let that number sink in for a second. That is the unprecedented amount recently paid by a consortium to acquire Royal Challengers Bangalore. It's a number that completely shattered every single market expectation we had. Just to put that into perspective, this single transaction exceeded the combined price paid for both the Lucknow and Ahmedabad franchises when the league expanded just a few years back in 2021.
To really get a grip on how explosive this growth is, we kind of have to rewind back to the starting line. Back in the inaugural 2008 season, franchises were acquired for what honestly looks like pocket change today. Rajasthan Royals were bought for $67 million and Chennai Super Kings for $91 million. Fast forward 18 years to our 2026 market reality, and those exact same assets are moving for well over $1.5 billion. That is basically a 20 to 24 times multiplier, an ROI that absolutely crushes pretty much any traditional stock index or real estate investment anywhere in the world.
And you know what's really wild about all this? The top financial experts completely missed it. Marketing analysts reviewing these recent mega sales noted that nobody truly knew what the actual market value was until the ink dried. These multi-billion-dollar sales defied all the research estimates. Why? Because traditional discounted cash flow models just struggle to quantify sports teams. They have this massive emotional premium and intense scarcity value that standard math equations simply can't capture.
Now, just for some quick context, official valuation studies, like the prominent 2025 report from Houlihan Lokey, they valued the entire league business at an impressive $18.5 billion. But there is a huge difference between brand value, which is basically an on-paper estimate of a logo's worth, and the actual transaction value. The transaction value is the cold, hard cash a motivated buyer actually wires over to buy the operation. And those actual acquisition prices blew the standalone brand estimates completely out of the water.
All right, Section 1. The countdown begins, ranking the bottom 5 franchises of 2026. Even looking at the bottom half of the league, the scale of wealth here is just staggering. At rank 10, the Punjab Kings hold a valuation of 8,000 crore rupees. I mean, the team in dead last is still hovering right around the $1 billion mark. Moving up, we've got Delhi Capitals at 8,600 crore and Sunrisers Hyderabad at 8,800 crore. Then the Bollywood royalty backing the Kolkata Knight Riders drives them up to 9,500 crore at rank 7, while the Gujarat Titans just narrowly missed the top 5 at 9,600 crore. The baseline is completely shifted. There's literally no such thing as a cheap IPL franchise anymore.
Section 2. The elite tier, breaking into the top 5.
Coming in at number 5, we have the Lucknow Super Giants. We are officially crossing that psychological 10,000 crore rupee threshold here. What is so incredible about LSG hitting 10,000 crore is their timeline. They only joined the league in 2021, so hitting this elite tier in roughly 5 years is an absolute masterclass in aggressive commercial growth. It really underscores just how fast the financial power of the IPL ecosystem is escalating.
Okay, this next one was a genuine shocker. The legendary Chennai Super Kings actually dropped out of the top 3. They're now sitting at number 4 with a valuation of 11,300 crore rupees. For a franchise that is arguably one of the most successful and deeply loved in global cricket history, this slip in the rankings has definitely been the biggest talking point for fans and analysts this year.
So, why the drop? Well, reports indicate CSK's slight slip is partly tied to MS Dhoni stepping down from the captaincy, which understandably affected their immediate marketing appeal. But look, they are far from vulnerable. Actually, they remain completely financially bulletproof. A massive 76% of their revenue is locked in from BCCI's central media rights.
That's the billions the league collects from broadcasters and gives to the teams just for existing. It practically guarantees profitability and makes owning a team a near-zero-risk venture.
Breaking into the top three, we've got the Mumbai Indians with a staggering net worth of 13,500 crore rupees. Backed by Reliance Industries, they are the very definition of a premium brand. When you combine that kind of massive corporate backing with prime real estate in India's commercial capital, Mumbai gets an incredibly high valuation floor. They're a legacy operation demonstrating immense commercial value year in and year out, pretty much entirely insulated from any temporary on-field slumps.
Taking the silver medal, it's the Rajasthan Royals at 15,300 crore rupees. This officially confirms their landmark $1.63 billion sale to a U.S. consortium led by Cal Samani. And the irony here is just fantastic. Remember 2008? The Royals were the ultimate Moneyball team, the budget buyers entering the league for just $67 million. Now, they're the second most expensive asset in the sport, and we're actually the first to cross that billion-dollar threshold before this year's absolute madness.
And finally, claiming the absolute top spot as the most valuable IPL franchise in history, Royal Challengers Bangalore, valued at an earth-shattering 16,706 crore rupees or $1.78 billion. They completely leapfrogged the entire competition following their recent acquisition by a heavyweight consortium, and in doing so, they've completely redefined the financial ceiling of cricket.
So how exactly did RCB pull this off? It's basically the perfect storm. First, you have immense institutional muscle stepping in from the likes of Blackstone and the Aditya Birla Group. Add to that the massive momentum of them finally securing their long-awaited maiden IPL championship and tying the whole shebang together. An unmatched, rabid global fan base driven by the enduring brand presence of Virat Kohli, a guy who acts as a global marketing magnet transcending the sport itself.
To wrap up this explainer, I just want to leave you with one thought. If a cricket team can multiply its value by 20 times in less than 2 decades, completely breaking records that top financial experts didn't even see coming, what ceiling is actually left to break? With teams now trading like highly sought-after global asset classes, how long until an IPL franchise casually crosses the $2 billion mark? Thanks for joining me on this deep dive, and keep your eyes on the business of the pitch.